Allocations. It's a term that gets tossed around a lot in business discussions, yet it often feels like a vague concept, doesn't it? But let's break it down because understanding allocations is crucial for anyone involved in managing resources, whether you're running a small startup or a giant corporation. So, what exactly is allocation? At its core, allocation is simply the process of distributing resources, be it money, materials, or labor. Think of it like dividing up a pizza. You need to assess how many slices each person gets based on their appetite, right? Allocation works the same way. It's about making sure that everyone gets their fair share based on need and availability. Now, why are allocations necessary? Well, imagine trying to run a business without a plan for your resources. It would be chaos. Allocations help ensure that resources are distributed efficiently and equitably. By carefully evaluating needs, organizations can maximize their resources, manage costs effectively, and ultimately achieve their goals. It's about striking that balance between what you have and what you need. Let's talk about budgeting for a moment. When we allocate resources, we're essentially budgeting. A good allocation process involves planning for both current needs and future requirements. It's like preparing for a road trip. You wouldn't just fill up your gas tank and hit the road without considering how far you'll go and how many stops you'll need to make along the way. Similarly, organizations must think ahead to ensure they have enough resources for ongoing projects and unexpected challenges. But here's where it gets interesting. Allocation isn't just about numbers on a spreadsheet. It involves people, too. Stakeholder input is vital in the allocation process. When you involve different perspectives, you're more likely to identify the best use of limited resources. It's about collaboration and ensuring that everyone has a voice. After all, if you're making decisions that affect others, it's only fair to include them in the conversation. Now, let's dive into fairness. How do we ensure that allocations are as fair as possible? First, we need clear criteria. Establishing objective standards based on need, potential benefit, or cost effectiveness can help guide allocation decisions. It's like setting rules for a game. Everyone needs to know what's expected to play fairly. Also, regular reviews of allocation decisions are crucial. Just because something worked last year doesn't mean it's still the best approach now. The landscape can change, and so should our strategies. But what happens when things go wrong? When allocations are unfair, it's essential to address the situation quickly. Identifying the root cause of the issue is the first step. Was it a mistake? A bias? Once you know what went wrong, you can create a plan to rectify it. This might involve reallocating resources or adjusting criteria for future allocations. Communication is key here as well. Everyone involved should understand the changes and the rationale behind them. Transparency builds trust, and trust is essential for any organization to thrive. Now, let's talk about a scenario that many of us dread, negotiating with a counterparty that's acting in bad faith. It's frustrating, right? If you find yourself in this situation, the first thing to do is review any relevant documents and agreements. Make sure you're clear on the terms you've both agreed upon. Then document everything. Keep records of communications and decisions. If things escalate, having a paper trail can be invaluable. And don't hesitate to seek outside advice if needed. Sometimes a neutral perspective can help resolve conflicts more effectively. In the manufacturing world, inaccurate cost allocations can wreak havoc on product profitability. If costs are misallocated, you might end up with products that are priced too low or too high, leading to poor financial decisions. It's like trying to sell lemonade without knowing how much you spent on lemons and sugar. You can't make informed pricing decisions without accurate cost assessments. Regular reviews and audits of cost allocation methods are essential to ensure that every product's cost structure is accurately represented. Speaking of costs, let's take a closer look at what's typically allocated in manufacturing. You have fixed costs like rent and equipment depreciation, which don't change regardless of how much you produce. Then there are variable costs that fluctuate based on production levels. Think materials and labor. Both types of costs need to be allocated carefully to understand the true cost of manufacturing a product. This understanding allows companies to price their products competitively and make smart decisions about production levels. But what if not all machines in a manufacturing setting are metered? How do you ensure accurate cost allocation then? This is where process-based allocation comes into play. By analyzing data from the machines that are metered, manufacturers can estimate the usage of non-metered machines based on the production processes they're involved in. It's a creative solution that leverages technology, such as software and AI tools, to provide insights into cost allocations. This approach helps manufacturers maintain efficiency and profitability even when faced with incomplete data. So, why does all of this matter? Because allocation is not just a back office function. It's a strategic process that can make or break an organization's success. By ensuring that resources are allocated thoughtfully and fairly, businesses can achieve their goals while managing risks and maintaining fiscal responsibility. Whether you're a manager, an entrepreneur, or just someone interested in the inner workings of a business, understanding allocations can empower you to make better decisions and contribute to your organization's success. In conclusion, allocations are a fundamental aspect of resource management that impacts every level of an organization. They require careful consideration, stakeholder input, and a commitment to fairness. By embracing a thoughtful approach to allocation, businesses can navigate the complexities of resource distribution and create an environment where everyone has the opportunity to succeed. So, the next time you hear the term allocation, remember it's more than just numbers. It's about creating a balanced and equitable system that drives success for all involved.